A German bank is calling for Bitcoin to hit $90,000 by May 2020, saying that Bitcoin was seen to be an even harder asset class than gold. Block 1, the founders of EOS, settles with SEC paying a $24 million fine. What does this ruling mean for other high-profile cryptocurrencies? And Zimbabwe is in trouble again. And I also dug out everyone's favorite sweater from the closet for today's wet and wild day here in Wellington, the Crypto Lark channel, where you get all of the hottest news, even when it's cold outside. So let's go ahead and jump straight into the good stuff here, guys. The 7th largest financial institution in Germany, Bayern LB, just took an in-depth look at Bitcoin and its possible valuation. And you know what their conclusion was? Stack, sats, and chill, baby. Yeah, groovy. No, but seriously, no, stack, sats, and chill, seriously. But their research report from the bank actually suggested that the upcoming Bitcoin halving is not priced in yet. In particular, they referenced the stock-to-flow model, stating that Bitcoin will obtain a similar stock-to-flow ratio to that of gold in the coming year. They go on to say that if the May 2020 stock-to-flow ratio for Bitcoin is factored into the model, then the price of Bitcoin should be looking somewhere around $90,000, which in general fits with the calls we've seen from a lot of different analysts, and I guess generally fits with the stock-to-flow ratio. Now, you can take this bank's comments with a grain of salt if you want, but do I personally believe that Bitcoin is undervalued? You bet your butt I do. Does that mean that we will hit those kind of high valuations by May 2020? Not necessarily. If the previous halving is anything to go by, then we won't hit $90,000 by May 2020. But that's kind of not the point of what Bayern LB is saying anyway. Even if the price does not update automatically the day before the halving or whatever that might be, the value according to the stock to flow will be at 90K at halving. This means that even if we go into the halving undervalued, it just becomes a waiting game for the market price to catch up to the value. So that to keep in mind. And speaking of Germany, this announcement comes only a few weeks after the second biggest stock exchange, Börse Stuttgart, opened a regulated trading venue for digital assets in Germany. Well, currently only Bitcoin to Euro, it will expand later into offering Litecoin, Ethereum, XRP, and more importantly, security tokens next year, which is pretty cool. And an ongoing story which may be adding to the future price strength of Bitcoin is the American repo market. If you remember a few weeks ago, the overnight repo market borrowing rate hit 10%, well above the expected 2.3%, when suddenly, one night, banks just decided to stop trusting each other. The unexpected spike in what had previously been a very mundane, ordinary, and little-known part of the financial markets suddenly threatened to destabilize the entire bond market and the entire financial system more widely. In spite of the New York Fed fronting up untold billions to try and introduce liquidity into that market, the situation is not actually getting any better. And there is already talk that the Federal Reserve might make this extraordinary situation money intervention a permanent solution. That's right, the idea has been tabled of a permanent blank check from the Fed to Wall Street. That sounds like a great idea. Something is seriously up on Wall Street, and I feel like, really, when you look at all this dysfunction, there has never been a better time to hold gosh darn Bitcoin. I love it. And over in Australia, the Reserve Bank cuts interest rates to the historic low of 0.75% to boost a weak economy. Now, this is the RBA's third reduction in the cash rate in 5 months. Third time lucky, I guess. Increased unemployment and slow economic growth are all signaling trouble for the Australian economy. The RBA has urged lenders to pass on the rate cut to the public, which on the one hand, if passed on, will be good for those paying mortgages, for example. But on the other hand, it provides even less incentive for people to keep their money in the bank. Many rates are hovering between 1 and 2% in Australia, which is definitely better than some international rates, but certainly not awesome. And you can be looking for those to drop even further. Personally, I'm loving crypto.com and BlockFi. The interest is nice, much nicer than banks, of course. Obviously, there's a different risk portfolio, but it's a sweet way to stack sats on a portion of my holdings. I love getting those little notifications saying you just gained some Satoshis on your interest account. It's pretty cool stuff. So, the big story, the big one. EOS has paid $24 million to the SEC. Now, that might sound like a lot of money, but you have to remember, EOS raised $4.1 billion. This is just a tiny little fraction of that money. And to put it into perspective for you as well, Block One paid $30 million just to buy the domain voice.com. The important takeaways to underline here are that the ICO was counted as an unregistered security offering. The EOS token does not, however, count as a security now that it is running on the network and that there is no sale ongoing. So the intermediary ERC20 token that we saw last year, that was a security, but not the mainnet token. That is not a security. According to Block One, this payment resolves all of the outstanding matters with the SEC. The fine paid is likely representative of the fact that Block One largely cooperated with the SEC here and sought to make a settlement deal with them, not to fight them. Of particular note, Block One did not do enough to try and stop US citizens from participating in the EOS sale. Apparently, geo-blocking was not sufficient. And that the Times Square ad that they ran actually contributed to what the SEC saw as conditioning the market. And that Block One created an expectation of profit from the efforts of others. And just for fun, immediately on the back of that story, we have this from the Nebulous firm. These are the guys behind the SIA project, which is the decentralized cloud storage network. They've entered into a settlement agreement with the SEC as well, just announced today, over their 2014 offering, particularly of its promise to pay future payments out. $225,000 worth of fine. And in this case, the SEC chose to pursue a, by percentage-wise, quite steep penalty, almost double of what was raised in the 2014 offering of SIA funds. Not to be confused with their later utility token offering. Now, some people are saying that Block One got some kind of a sweetheart deal like the banks regularly do, and well, yeah, they kind of did. $24 million is chump change for Block One. But at the same time, Block One did play nice. So there's that to count in. Now, what does this mean for EOS now? Not really anything. Exchanges do not have to delist the token or any such drama because of basically the EOS mainnet token not being a security. Everything continues as normal, just with a little pinch off the side for the government. And because this was a civil settlement, it is unlikely that this will set any kind of serious precedent for future companies. Settling and not fighting was likely a very clever move by Block One. Just give Uncle Sam his cut and move on with your life. Also, it's interesting that this announcement came just a day after Coinbase announced that it had co-founded a ratings agency called Crypto Rating Council, which will issue cryptocurrencies basically scores from 1 to 5, 1 being something that is unlikely to be a security, and 5 something being that is highly likely to be a security. EOS, by the way, was 3.75. Apparently the SEC agreed with that ranking. And while the rankings are an interesting idea, I personally find the site to be super lacking in information with only around 3 short phrases per cryptocurrency and no real deep information. But looking around the list, it becomes apparent that mined coins like Bitcoin and Litecoin and Monero are most definitely not securities. We've already had clear guidance from the SEC on this. The ones which were ranked the harshest were Maker, not DAI, but Maker, and Polymath. And interestingly, XRP was ranked a 4. The XRP security question has been a long, ongoing conversation. because XRP is kind of an ICO without end. I mean, really, if you break it down, right? Ripple, the company, has been selling hundreds of millions of dollars worth of XRP just this year alone to institutional buyers. Keeping the sales to the big money crowd, though, is probably what is likely to keep them on the right side of the law. But if there was a surprise ruling that XRP is a security, it would likely only mean some kind of a fine for Ripple, the company, because let's face it, Ripple would also almost certainly cut some kind of a deal. And I don't think it would have any kind of dramatic market action either in that particular situation. Ethereum ranked at a very low 2 on this ranking score, but still, the token sale might be deemed a security offering if we go back in time. I think at this point, Ethereum's probably been grandfathered in since it did happen a long time ago, but then they did hit SIA for a 2014 raise, so guess we'll see. But the mainnet token would certainly not be a security if the EOS settlement is anything to go by. And the SEC chair has previously stated that the SEC does not consider Ethereum to be a security. Hashgraph also got a high likely to be a security score, but it went with the accredited investor route during their sale, so should be fine. Tezos as well hit a pretty high score, so if Tezos is hit with the same fine, just as an example of what happened to EOS, that would be much more significant for Tezos because they only raised $232 million, thus a $24 million fine would be a little more than 10% of the total funds that they raised. Now, whether or not we see any action versus Tezos is a completely different question, but if they saw such a settlement, it'd be much more dramatic percentage-wise. Cardano strictly raised from East Asian, mostly Japanese investors, so they should not be facing the wrath of the SEC anytime soon. And that brings us to KIC, who it seems the SEC is in the process of completely ruining, as it has just been announced that KIC is actually closing its messenger and laying off staff to continue the SEC lawsuit fight. Ouch. Choosing to have a very public fight with the SEC was likely not the best course of action, regardless of what your opinion of the SEC might be. The KIC CEO, Ted Livingston, confirmed that the firm will shut down the KIC app and reduce its staff down to around 10%. That's a 90% reduction in staff. Boom, that is bad news for KIC. Apparently the lawsuit is bleeding the company dry. It seems that the 30-page letter that they sent, which concluded with, should the SEC choose to file an enforcement action, KIC and the Kin Foundation are prepared to litigate and are confident that they will prevail in court. It seems that the SEC willingly accepted that challenge. They could have just settled. They could have just settled like Block 1 did and then just moved on with their lives. Anyway, the lesson here is that if you choose to have a sale which in any way could possibly be accessed by US citizens, then register your security token offering, do KYC, and build something. And the SEC is going to be all good with you in that situation. Now, if you make a mistake in that process, play nice, pay your bribe with a smile, and do not kick the frickin' hornet's nest. KIC. Come on, man. Anyway, moving on. Well, US markets obviously are very important. They are far from the only game in town. Over in Japan, 6 major Japanese brokerage firms, including SBI Securities and Rakuten Securities, have officially established the Japan Security Token Offering Association. Now, the association aims to support the development of STO fundraising by consolidating expertise in the industry and by ensuring compliance with laws as well as protecting investors. The old meme of STO boom coming soon. I know it feels a bit worn out. It's probably about as worn out as when backed was, but make no mistake, even though these things are taking longer than we sometimes expect them to be, security tokens are coming and they will have a big impact when they fully deploy onto the market. It's just a question of when that happens. And finally, over in Zimbabwe, the Zimbabwean government bans mobile cash and Forex transactions. Oh man. Now this follows a move in July that banned settlement of local transactions in Zimbabwe using foreign currencies, including the US dollar, British pound, South African rand, and any other foreign Currencies. So the government is banning all Forex and all capacity for people to have any kind of freedom of money. Meanwhile, the IMF puts the figure of inflation in Zimbabwe at 300% according to August's outlook, meaning that the government is doing everything in their power to stop people from being able to access basically life rafts to get themselves out of this growing tsunami of fiat death again. Zimbabwe, of course, being famous for totally failing at the fiat game, with their previous fiat before the new version of the fiat now having the infamous $100 trillion banknote. Seems that the government of Zimbabwe is gearing up to screw its citizens again. Government. Anyway, Bitcoin fixes this. It really does. Bitcoin can't be stopped by the government. Bitcoin, freedom of money. It's no surprise that Bitcoin has remained so gosh darn popular in Zimbabwe. Government! Ah! Anyway, you guys let me know what you think about any of today's stories down below in the comment section. Just a reminder, as always, you guys frickin' rock, man. I love you all, so thank you so much for watching today's video. And if you did like it, make sure to hit that thumbs up button and subscribe to the channel if you're new around here. Long live the blockchain, and peace out till next time.